There are a lot of misconceptions when it comes to high risk to reward trading. People don't believe that taking this type of trade is actually possible for a 1 to 20, 1 to 20, 1 to 16, and what so on. And the reason for it is because they don't know the one thing that I'm going to show you today. This one thing that I'm going to show you today will exactly explain you objectively how you can take the same trade as I did over here, and over here. So let's get started. So before anybody starts saying, oh, these are hindsight trade whatsoever, I highly invite every one of you to join my Telegram group. The link is in bio, it's for free. And you can see how I forecasted, right, the latest trade over here. So this one has been broken down inside the group. I explained them why this was a valid setup. And I even shared a forecast telling them how they could have taken or expected this type of move on EURUSD. So before you start saying, oh, you're bullshitting whatsoever, please just join the Telegram group for free. It's literally free and you can see the trades breakdown on there. Anyway, this being said, let's start with the topic of the day. So why do you guys think that people always complain about saying that high risk to reward trade is not possible? What is exactly the definition of high risk to reward and why this matters, why this is very important? So the problem is that nowadays there are so many concepts and topics out there, okay? So people will tell you to focus on so many things. They will tell you to focus on some sort of, let's say, imbalance over here, right? Because imbalance need to be filled and it's very important that we target the imbalance. Or probably they will tell you, look, there is a liquidity over here and the liquidity need to be targeted, right? Or liquidity over here, they need to be targeted. Then I don't know, some people might pull up the fib and they say, oh, look, there is a 50% or there is a 61, there's a retail level. Some other people will be like, oh, there is a build up, you know, you got liquidity over here. So wait for the liquidity to be taken. When the liquidity gets taken out, you target the opposite direction. Now, although all of these are certain degree the truth, it's not what you guys should be focusing, especially if you want to truly catch this type of high risk to reward trade. So the problem here is that there is one thing that literally I see many people doing wrong, which is not taking in consideration before even looking at the imbalance, liquidity, or whatever other concepts they're using, is the understanding of the direction. Yes, exactly. People are not capable of understanding where exactly the market is going in a given time and narrative. So you got this low, and then you have this high over here. So if you do not understand the direction of the market, it will be very improbable for you to understand from where and how you should be taking the right trade for your right risk to reward. Okay, so let me clarify this better. Let's stay on this, okay, on this drawing over here. If I'm having, this is the range, right? This is the range and price is currently going bullish because price has just broken above this high, right? What is the next thing that price can do or should be doing? Is probably showing some sort of retracement. Now, many people at this point, what they will start doing is that in a smaller time frame, they will be like probably following a smaller range. So they will be taking a trade over here and they will be like, okay, I see an imbalance over here, let me target over there. Or I see liquidity over here, let me target over there. So they focus so much on that, but they forget that the overall bias of this move is actually bullish. It's to the upside, right? Now, why this is important? It's because we will never know if at this stage where you are taking the trade, price will eventually come over here or over here. And the likelihood of that, right, price reaching this compared to going higher, okay, is extremely, extremely low. So what do I mean by this? Is that when price is retracing, we don't know where exactly statistically price can stop. It can stop over here or it can stop over here. But let's suppose now price reach an in-depth zone over here, which is the demand area of this extreme move. And then eventually you start seeing price doing something similar to it, right? And it start breaking structure to the upside. Now, what is the next thing price should be doing? Guys, this is a very, very simple things that, trust me, will change your trading forever. The next thing the price should be doing, the likelihood of that, It's not you looking at imbalance over here, liquidity over here. No, you target straight away to the next high. Why? Because if this move to the upside, obviously adding further confluences, is real, right? That means the expectation and the likelihood of the next impulse to the upside is going to be equal, if not greater, than the previous one. Therefore, if you pull the trigger and you take the trade over here, the likelihood of you to get right compared to what you were trying to do over here, targeting this over here or this over here, right? This one is way better, okay? The risk factor is probably less compared to what you're trying to do over here. Are you guys following what I'm trying to say? Don't worry, when I go to the chart and I explain it to you. Now that you understood this, now that I explained to you this, let me go to the chart and let me show you exactly what I meant and how and why I was capable of taking this trade, this trade, this trade, and even these trades over here, right? So you can already see pretty much, okay, look at this. You can already see pretty much this buy, there are 3 buys here, by the way, are exactly reflecting what I just explained it to you in my drawing over here, right? So you see this? This is exactly what I was looking for when price reached this extreme zone down there, okay? Now you might be wondering, where did that happen? Look at this. You see, there's an arrow over here, that black arrow. That's exactly when I saw price was going bullish. So when price started going bullish, what is it that I started looking for? Instead of thinking, oh, there's a liquidity here, imbalance here, because there are a lot of imbalance, all I did was pretty much wait for price to hit a demand zone, right? Look at this, demand zone like this. And when price broke the structure, then I started looking for a buy. And that's exactly what happened over here. Look at this. Price came here, high, low, takes liquidity further down here, and then breaks the structure. This was a very, very clean buy. I partialed over here because obviously this is a 1 to 20. You could have taken the risk to hold the whole volume all the way there, but partialing out around 1 to 12 whatsoever, because that was also the end of the day almost, right? You guys can see it's like 8 o'clock in the evening. I just want to be to the safe side. And guess what? The target is still valid. It was over there because then eventually the morning after, price came back over here again, and then it started shooting all the way up. And again, as I said, this was forecasted on my Telegram group. Let me quickly show you that the drawing I made for the community. You go, this is the one. So at this moment in time, you guys can see, I was telling to the group why I was looking for a buy, where was my target. This is a very, very refined target. And then the next thing I wanted to see price doing was simply doing this move, giving me this pattern and taking a trade once again towards the same direction. And guess what happened? That's exactly what happened down here. Price came all the way to the extreme of this demand zone, right? And then it gave us an amazing, amazing, beautiful entry. And once again, this is roughly 1 to 16, and you could have already partialed out all the way to 1 to 10. If you don't want to go for 1 to 20 or 1 to whatever because you don't feel comfortable, you don't need to. And now you can start understanding the same things, why this trade and this trade have a high risk to reward. This was more of a hedge. So I used a hedge approach in this case. So you guys can see that my target was all the way down here. Why was there? Might be wondering why the target was all the way down here. And why I went for such a long sell like this, right? Because price has eventually broken all the relevant structure from this low, this low, this low, whatever. It retraced to the extreme, and then there was a nice sell over here. However, this buy, this was a hedging position that I've taken according to certain confluences. So in either way, this or that, one of them, the two I knew would have played out. Why? Because I'm playing with the intention of the market, with the direction of the market. Okay, I'm not guessing, oh, look, there's a liquidity. Oh, look, there's an imbalance over here. Oh, look, this is what. No, I don't care. I don't give a damn about it. Of course, I do use them as a confluence for other factors. But again, my main important things is understanding the right direction. Once you know the right direction, once I saw price from this push breaking the structure, right, and showing the bullish intentions, because price has anyway shifted momentum prior to it. Look at this. So guess what I would have done it once I saw this? I would have definitely waited for price to come over here. That's why I got the yellow box. That's a very refined advanced type of logic why that was the zone for me. And then from there, I would have waited for here. And guess what? I would have done it. Bam, all the way there. You guys see that? So this is very important because I see so many people getting stressed out on taking a trade and going against something they should be even doing. Like, for example, I've seen so many people taking a trade over here. They all got stopped out. But then eventually, I saw people even targeting under this low, okay? Or even this low. Why? Because liquidity equals whatsoever. So now, for example, let me show you this. In this circumstance, you guys can see that we have like a quadruple bottom, right? This. So I know so many people started from yesterday, they started selling because they saw equal over here, liquidity. But I don't care about liquidity. Because for me saying, oh, there are 3 equals over here, and I'm going, against them because I feel like liquidity will be grabbed, it's like me trying to forecast something that didn't even happen yet. While me looking for a buy, I'm not forecasting something that didn't happen. It actually happened. And what was the signal? What was the trigger that make me understand that there is a likelihood and potential of price going higher? Was this breakout structure over here, ladies and gentlemen? This is the thing that many people miss out so much. This was the trigger point that make me understand the price is going higher. Therefore, I just look for this type of setups. All right, and this is something that I've been doing for such a long time on my channel. Look at this, like I got videos after video, forecast after forecast, and it's just mind-blowing to understand how this simple yet powerful concept can literally change everything when it comes to take high risk reward trades. Okay, look at this. These trades over here, they got potential of 1 to 100. And if you guys don't believe me, or you feel like, oh, he done it or whatever, he done it, because eventually this was the last target, okay, you guys can go to my channel. And I got videos where I literally share and show the exact drawing, okay, the price did over here. This was a forecast I made, and look at this, price broke, tapped over here, and eventually, this was my final target, it came here. Then again, here, that was a forecast I made, break, test, and coming all the way down. And price, eventually, it just melted. But how? Why did I take that for? Because I knew the game, I knew what was going on to the left. You guys want to know what's going on to the left? Let me show you this. In a bigger picture, you guys see, the range is here, high, you got the low, you got the grab of liquidity or breaker circle, whatever you want to call it, price comes to the extreme. And what do you guys think I should be doing at this stage? Just looking for sell. Yes, exactly. Look, there was another trade, 1 to 43. This had a potential for a 1 to 200. Now, I know it's shocking. Many people will be like, oh no, how is that possible? But if you rewatch this video, or by now, if you have understood the logic that I explained it to you, you can see that this is actually possible. And now, before somebody else starts saying, oh, but before you take a trade, you have taken 100 of losses or whatsoever, because I had comments of people saying, oh, you take a lot of losses before blah, 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 okay? I wanted to show you something. Let's go back to RUSD, okay? So then you can understand, if you are hitting a lot of losses on a high risk to reward, that's because you don't know how to understand the narrative. And let me show you this. So here, what is it I said on the group? In this, look at this. That was a forecast. I simply said, guys, if price retraces and it does this, that's the only time where I take the trade. If it doesn't, I don't take it. Finish. So what do you guys think happened over here? When price came to this extreme demand zone, right? I have taken one trade here and one trade here because I saw the exact pattern that I was looking for. But I know people that without having confirmation, without having pattern, they start taking buy. And then what happened, the next thing you know, they start taking one stop loss over here, one stop loss over here. Why? Just why? Okay? And those are the people then that comes under my video and saying, oh no, these are not possible. This is not possible. You're just taking 10 losses before you hit your 1 to 20. No, I don't. Because I know that this is my POY, right? And all I gotta do is that when price gets here, wait for this pattern. That's it. If I get this and it aligns with my higher time frame narrative, I take the trade. If not, I don't take it. And how many times do you guys think that this pattern can happen within such a small range? 5 times, 6 times, 7? No, that's never going to happen. Statistically, that's the likelihood of you having 5 times price doing this, right, is almost near to, I wouldn't say 0. Okay, you can have very, very bad days, but it's like once a year probably. Okay, I backtested this shit a lot. That's what I'm telling you from experience. So it's all about putting things together, putting the pieces together. And I hope by me showing you the logic of this, it might help you to understand what is actually happening. Here, in this level, I know many people they shorted because of this equal low over here, this equal low over here. And I was like, no, I'm going for buy. But guess what? Potentially, right, price could have even come all the way down here. So in this case, let's say that none of my buy will have happened. Let's say the price will have eventually come down here, broken the structure. What do you guys think I would have done it? I would have waited simply for a nice sell from here, right? Bum, taking the trade and riding it all the way down here for a nice, at least I'm saying 1 to 10 risk to reward. And ladies and gentlemen, that's exactly how you catch your high risk to reward trades. And you need to practice it. You need to train your eyes. You need to understand it. On the top of that, I had a lot of requests of people asking me for mentorship. Guys, I do not provide that. But if you're somebody that's been trading by yourself for such a long time and you're looking to find a trading community, like where you can meet literally open-minded people, like traders that discuss, get feedback, you want to get like tailored feedback from me, this is something I'm currently offering. The link is bio for further explanation. Just click on it. You can see, and it's extremely cheap. It's like less than a, what's it called? Like even not paying $1 for a coffee is less than that. So just check that out. See the kind of things I'm offering. I'm sorry, I cannot do a mentorship, but this is the best I can offer right now because my time is very tight. And I'm doing a lot of things for free in this channel, even on the Telegram group. A lot of free nuggets, knowledge, information has been dropping for the last whole year, literally, okay? So my main aim is not make any course for the time being, whatever, because I have other priorities to take care of, but I can still help you out, guys, within the parameter of giving you feedback, help you with your trading journal, trading analysis, and whatsoever. And trust me, even from that, you can learn a lot of things. This being said, I'll see you to the next one, and I hope you really enjoyed this video.